A question on a lot of people's minds right now is, should I stop funding my retirement in this crazy economic environment we're in? Well, in this video, we're breaking down the answer and explaining situations when it may make sense to either pull back or stop funding your retirement. And welcome back to Stop Being Sold. My name is Michelle and I'm here with Brian. And if you've been wondering if you should do something else with your money instead of stashing it in your 401k or your IRA, then you're going to want to watch this video all the way through.
Yeah, I can't tell you how many times I've been asked this question in the past few months.
Right?
And I totally understand. Investors are nervous and they're afraid of losing money, or like a majority of people who took our recent poll on YouTube,
Yeah.
they've had limited funds and aren't sure if it's a good idea to keep saving like they used to. And I don't want what I'm about to say to seem insensitive, but my answer to the question of should I stop funding my retirement right now is, why would you? Okay. First of all, when markets are down like this, now's the perfect time to pick up some stocks because they're on sale, so to speak, right? This means you can pick up more for less, and when the markets go back up, you'll have even more in your portfolio. If you're considering pulling back or underfunding your 401k or IRA because you're afraid of losing money, it's critical to take a step back and shift your thinking.
Absolutely.
Yeah. So one way to help shift how you think about the down market in your 401k, Michelle, we talk about this all the time. Go look at the history. What has history done? Let's go back recently. Just think about this. If you had stopped contributing or even sold out during the 2008, 2009 financial crisis, at the bottom of that crisis, the S&P 500 was 683 points.
Right.
Today, it's around 3,700 points. That's over 5 times off the lows of 08, 09. I was 41 then, and now I'm 45 or 55. Ooh, what am I today? 55.
Math. Math is hard.
Yeah, but not selling in 08, 09, I was able to continue to grow my accounts, and I'm really happy that I did not sell and make that an emotional move. But if you stopped contributing during the 08 crisis, you would have missed the huge rally off them lows also. And that, Michelle, does not even include your employer match.
Yeah, if you're getting that 401k, absolutely.
Yeah, and same thing happened in 2020. If you had stopped contributing or even sold during the spring of 2020, and trust me, that was rough. No one has seen a situation like that before.
Yeah.
And even financial advisors have never seen an economy that was shut down. Okay. So just 2 years ago, think about this, March of 2020, the S&P 500 fell to 2,304 points. And today, back around 3,700, up nearly 60% off the lows of 2020.
Yeah.
And, I could name several other times in history where this has happened, but I think you get my point.
No, absolutely. I mean, past performance does not, what is that they say? Past performance does not indicate like what's going to happen in the future, but there are trends, and what goes up always comes, what goes down always comes up, right?
Sure. It always comes back over time.
So when we're too focused on the short term, we fail to look at the bigger picture, the long game, I should say, which is what really saving for retirement is all about.
Yeah, exactly. It's the short-term thinking that really gets investors into trouble. They think too short-term and then make rash decisions based on a news item, or they just panic because it feels and looks like the sky's falling.
Yeah. Well, media doesn't help with that, do they?
No, it doesn't. I mean, we're 24-hour news coverage today, and every word it's a headline. It's got to be over exaggerated at some time. So
absolutely. All right. So let's get into situations when it might make sense to pull back or stop funding your retirement.
Big one. Let's start with if you're getting the company match in your 401k, but you have a ton of debt and want to divert some of your savings towards paying off that debt. And the key here, Michelle, is to contribute enough to still get the company match. Please get that free money, because in the long run, it's definitely going to pay off, right? And then if you want to divert additional retirement savings funds to pay off high interest debt, I'm okay with that, because the company match is essentially free money that your employer contributes to your retirement account based on the amount that you contribute.
Yeah.
It's a valuable benefit that can help you build your retirement savings more quickly. So please don't miss out on that one. So with this high interest debt, it may not be a bad idea to strike a balance between saving for your retirement and paying off that debt. Create a budget that, and I know people hate creating a budget, but
Right.
honestly, look at these numbers, folks. Prioritize that debt repayment while still allowing you to contribute to your 401k to receive that full company match. You may also want to explore other debt repayment strategies, such as debt consolidation or refinancing to reduce your interest rates. And by doing that, it can make it easier to pay off your debt over time and keep funding your 401k. So, as long as you take advantage of these low stock prices.
Yeah, absolutely. So IRAs have a cap of 6,500 this year, and if you're over 50, it's 7,500.
Yep.
So contribution limits are lower than the 401k, obviously.
Right.
What about those with IRAs who have high debt?
Okay. This is slightly different because if you're paying more in interest than what your earnings are in your IRA, it does make sense to pay down that debt first before you fully fund your IRA. You're
Okay.
not getting the company match here.
Okay.
So there's the difference, big difference between the two.
All right. Okay. So I just have one more question on this. So
Mhm.
I understand that it does, if you have really high interest debt, pay it down,
Right.
right? If you're paying more in interest than you are in your earnings. However, like, do you suggest maybe just trying to put something in there?
Oh yeah, yeah. Keep small amounts still going in, especially while the market's in a downturn, because
Okay.
you're still buying at lower prices than what it may be in 5, 7, 10 years from now. So
Okay.
I agree on that.
All right. So let's move on to another reason you may want to stop funding your retirement savings. What you got?
Okay. Yeah. How about if you're getting company stock and you want to diversify? This is common, very common today. If you got a significant amount of company stock, it may be a good idea to reduce your exposure to that single stock by selling some of it and using the proceeds to invest in other assets. However, it's important to do this in a thoughtful and strategic way, taking into account your overall investment goals, your risk tolerance, and your tax situation.
Ding, ding, ding. Watch
Ding,
those
ding, ding.
tax consequences. Oof. So, in this instance, would you recommend people speaking with a CPA as well as a financial advisor, like getting both of those perspectives before making a move?
Yes, definitely. This is a complicated matter
Yeah, it
that
is.
most people don't know how to deal with. And make sure your advisor and the CPA agree on this matter because sometimes they may even offer different suggestions. So,
Okay. All right. What about people who are nearing retirement, let's just say in the next 10 years, and they want to divert retirement savings to pay down a mortgage or invest in other like, investment vehicles, put their money somewhere else?
okay. First, again, you should not stop funding your retirement, even if you're retiring the next 10 years or less. You just mentioned the contribution limits. As you
Sure.
get closer to retirement, you're older, of course, right? So you get to put more in. So it's very important to keep funding this, especially during this time leading up to retirement. Our goal is to make sure you have enough savings to support your lifestyle throughout retirement. But here's the but. Paying off your mortgage as you near retirement makes sense almost 100% of the time if you have additional funds to make this happen. This is usually your largest payment going into retirement
Yeah.
and could drastically increase your income in retirement by paying this off first. In this case, maybe pull back on your savings a little bit, but do not stop.
Okay. Yeah, I do know quite a few people who've paid off their mortgage, and it is freedom.
Especially when they step into retirement and they lose that guaranteed income that's coming in every Friday. Their normal paycheck
Sure.
and they're going into retirement, their income may be lower. Imagine going into retirement. I let's put it this way: my clients that I know of that have paid off their house before they went into
Yeah,
retirement, Michelle, are happier and will make their retirement last a lot longer that way. So
absolutely.
peace of
All right.
mind.
So, are there any other situations where it makes sense to stop funding or pulling back on your retirement?
There could be many other situations, Michelle, but those were the ones that we mentioned were the most common ones. So,
Okay. All right, so here's the deal. We're going to drop a link below this video in the pinned comment as well as the description on 401k loans and why you should be aware of double taxation. So, if you're looking for extra cash right now and you want to tap into your 401k, if you have one, be very, very careful. Do go check that video out.
definitely.
Also, hit that like button if you like this content. Don't forget to subscribe. Brian and I are putting out videos daily that will help you make the best financial decisions possible. Brian, anything else you want to add before we wrap this up?
Well, just be very careful on this, but your retirement, you got one chance at having the best retirement. Let's do it now.
All right. Amen to that. Thanks so much. And thanks everyone who watched.
Thanks, everyone.